Wintermar Winds, which is another stock that we own. So first, the bad news: the sales down 37% in the third quarter after 36% down in the second quarter, and it's at 9.5 million. It's well below our forecast. We're looking for recovery here. The good news is that sales were up a little bit, 6% compared with the second quarter. So hopefully this is the turnaround, and we expect sales to go back up from that 9.5 towards 12 million by the third quarter next year. So the cash flow has been positive despite the sales slowdown and weak investment cash flow. Operating cash flow. The investment cash flow has been positive or flat, and that's helped to have positive free cash flow. So it was 2.1 million excluding working capital in the third quarter versus our 2.5. With zero investment and rising sales, we get 2.3 average cash flow for the next 4 quarters. The balance sheet, this cash flow has helped the net debt come down from 143 million. Is down another 1 in the third quarter to 44.9, and with no dividend, our cash flow will bring it down to 35.8 in the next 12 months, getting closer and closer to zero. Profit is still in a loss, a little bit better, 4 million compared with 5 million in the second quarter because of the higher sales. The cash cost ratio is a bit better at 88%. We use the average of this year so far, 80%. So a bit more optimistic. The loss would be lower at 12 million. So our cash flow is 9.2, a little bit less than before. At 1.6 with a huge adjustment, 0.2. We still get a 378 target price, which looks like that. So they've paid out a huge amount of capital, 120 million. That's going to rise again, and that should eventually start to benefit the equity shareholders. So it's trading at only a quarter of the value of the cash flow it's paid. The capital it's paid so far. We would be expecting something like 5 to 7 times normally.